there's significant value. Now, one of the major misconceptions or concerns I hear when we have this debate, people that say, no, I just want a pre-qual, most of the time, that is because they don't want to hurt their credit.
Yep.
But we just require a soft credit pull. We don't even do a hard credit pull until you actually find a home and go under contract. Welcome to Loanselevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
So we're talking about pre-approvals and what it means, why it matters, the pros and cons, I guess, versus what some people think a pre-qual is versus pre-approval.
Yeah.
Misconceptions.
Yep.
So what do you think? What would you break it out with?
Well, really, I think people need to understand what the difference between a pre-approval and a pre-qualification is, because oftentimes I'll get clients calling, asking for one or the other, but just blindly asking. So a pre-approval is going through your whole scenario, verifying everything to make sure your actual loan can work and you are legit pre-approved. What this means is we're checking off your credit, income, and assets. So we're going to first get in a 1003 or a loan application from you. This can be done over the phone or in person or online, whatever you guys prefer or whatever the client prefers. Typically, we like to do over the phone just because it's the quickest, or an online. And the reason why I like online is the application is a smart application based off the information that the client puts into the application. It's going to ask for specific documents. So that way they can get it all done in one swoop. And then they're just playing a waiting game for the team to get back to them on next steps. But included in the application, what we see most of the time of what they're going to need to upload in documents is going to be pay stubs, usually 2 pay stubs, or a year-end pay stub as well, if they've got some sort of commission-based income or variable income, something like some sort of that. Then 60 days bank statements, usually from the account that which the cash to close is coming from, unless, of course, we need reserves.
And on our technology, by the way, this is one value, which actually works the same way, whether it's a phone application or online. You can actually connect your bank accounts and enable it to upload electronically automatically, so you don't have to go track down the documents.
Yeah.
And then what, a W-2? Yeah.
And it's not like we have, sometimes clients get concerned about that. I don't know if you get texts when they're filling the application. It's like, I don't want to give you my bank account information. We don't get access to your actual bank. We just get to see the balances. That way.
And the history, what we need for underwriting. It's almost like, we
can see the snapshot.
Yeah. And lots of places use this. Anywhere you connect your bank account, like through your financial institutions, like automatic bill pay, or even Zelle or Mint or something like that. It's the same technology. So it's all secured. We have no access to it, but it does simplify the process. To reiterate, pre-approval basically is a more robust, detailed review of your file to make sure that what we say you qualify for, you can certainly qualify for, and we understand what program is going to work, and there's certainty to it. It also allows us to be, with that certainty, allows us to move forward quicker on getting you to closing once you go under contract. So there's significant value. Now, one of the major misconceptions or concerns I hear when we have this debate, people that say, no, I just want a pre-qual, most of the time, that is because they don't want to hurt their credit.
Yep.
But we just require a soft credit pull. We don't even do a hard credit pull until you actually find a home and go under contract. So the soft pull you won't even know happened, but it enables us to get a full-blown pre-approval completed and enables us to put our brains to the test of, like, how can we get as strategic as possible to get you in the best possible loan program. So as early as possible up front, we're turning over all of the stones and coming up with a strategy that is going to be most beneficial for you, and you learn more information about the options and the different variables that can impact your loan, and frankly will probably impact the decisions you make on the home you want to buy, how much you are willing to offer, how much you want to put down. Like, the pre-approval can have such a positive impact on your decision-making process.
Yeah, and backpedaling a little bit, not every lender can do a soft pull for a pre-approval. So that's just specifically for our team and our branch. And some can do a soft pull, but it's not a true tri-merge soft pull like ours is. Maybe they're only pulling from one bureau, which doesn't give you all the information you need for a legit pre-approval.
And can actually be dangerous because if you only see one bureau and the score is 720, but then the other two are 680 and 670, well,
we're going to go after the 680 score.
Yeah, and your whole program just changed. Like, all the qualifications changed. You may even be disqualified at that point.
Yeah.
And ours allows you to, which may not make perfect sense, but ours allows you to run the automated underwriting system as well, which is a critical component to 80 or 90% of the loans that we do are automated underwriting driven. And our soft pull enables us to do that, which, like you were saying, many lenders' soft pulls don't allow that to happen.
Yeah. A pre-qual is more, I can do a pre-qual in a matter of 5 minutes. I'm going to hop on the phone with the client. I'm going to ask them what they make annually, what they guesstimate their credit score is, what other debts they have, and then what the purchase price they're looking for is and what down payment is. And I can calculate that in my head and spit out a pre-qualification.
And that's more like, I think these numbers check out. Sounds good.
The
I think
story
you should
makes
be
sense.
okay.
Yep.
But I think you should be okay seems like a pretty unreasonable approach to a multi-$100,000 or multi-million-dollar transaction. It just seems unreasonable to not invest. I mean, our pre-approval process for the clients takes less than 60 minutes total time of the client's effort, including the consultation to develop a strategy, a full soundproof strategy on exactly how to go structure your offer and go under contract. So from getting the application, uploading the documents, having the consultation, having a full-blown roadmap on exactly how to do the transaction takes less than 60 minutes of a client's time to accomplish.
Yeah.
It's not that big of an investment. And lots of people get freaked out about it.
Really
And there's no fee, there's no obligation, no hard credit pull.
Yeah. Well, and the thing is, too, we'd want to have all of your documents in before we have a consultation. Some people are like, okay, I did the application. When can we have the consultation? And it's not that we don't want to have the consultation with you. It's I want to have all the information in front of me so that way I can see what I have at my disposal to come up with the best plan for you. Because if there's parts that I don't know exist or are missing, we're blindly shooting in the dark to see what's going to work.
Or as consultants. So TJ and I serve as consultants, and we have team members that are pre-approval specialists. Their only job is to go through the application, get the pre-approval done as quickly as humanly possible. Our job is to then go investigate this information, read between the lines, and come up with a good strategy, because what we're good at is understanding options and nuances and different things that can help you strategize financially better. And the reason we need the documents and an understanding of your full profile is there's little things that can make a significant impact on what we recommend you doing.
Yeah, and that's why we have 3 consultants with you, myself, and Ryan, because we want this to be a quick process. If you can get in the application and get the documents to us, we can get on the phone with you guys same day. Yeah. It's not going to be like you're going to be waiting days or weeks on end for this, which I've had that experience working with credit unions in the past where I've submitted information and not heard from them for weeks on end.
Until you call them and say, hey, is there an update?
What's going on?
Oh, yeah, hey, let me pull up your loan application.
No, we're going to be proactive and get you that pre-approval letter the exact same day.
Yeah. Generally speaking, we have, within 2 hours, we have a pre-approval issued to you, or the ability to issue a pre-approval.
Yeah, that's the key term, is the ability.
Within 2 hours of you submitting the loan application. Yeah. And then, like TJ's saying, within the same day, generally, we have a full consultation completed so that you're getting professional, high-quality, in-depth advice and strategy and service in a very short amount of time. And it just gives you more certainty, gives us more certainty, you the ability to negotiate heavier with, quick closings or whatever. Like this month, we had 2 deals that we closed in 8 days.
Yeah.
We wouldn't have been able to do that if the people weren't approved with us first, because there's so many different variables that we have to figure out. It could burn 1 or 2 days just to get everything submitted possibly. So
in that consultation, what are we going over?
Yeah, real quick, I just wanted to plant one small seed. So I want to give you how the pre-qualification letter versus pre-approval letter works. So both documents will have the basic information. What's the date that the pre-approval happened or pre-qual happened? Who is the borrower? What's the property address? What's the purchase price? What's the loan program? But the contingencies are the issue. So you look at a pre-qualification letter and put yourself in the shoes of a property seller or a property seller's realtor reading these two different letters and figure which one would you have more certainty on? Because oftentimes you're competing against more than one offer. So it's like, what would you feel more comfortable with if you were the seller submitting or reviewing offers? So the pre-qual says this pre-qualification is conditional upon 1, full verification of credit, income, employment, and assets. In other words, we have nothing documented. Number 2, an acceptable commitment of title insurance, acceptable appraisal, and an acceptable real estate purchase contract. Those last 3 are the things that you need on anything. The caveated full verification of credit, income, employment, and assets basically is saying we
haven't
have
seen anything.
Nothing. So we think they might be pre-qualified based on the information they told us, but that's about as far as it goes. And then we go on to say, this is just the legal language that's required. Please note that this pre-qualification is subject to final review by an underwriter. Any adverse changes of credit, debt, income, employment, and so forth may render the pre-qualification null and void. This letter is not a guarantee or assurance of a mortgage loan. So it's like there's practically no assurances. We've done nothing. It's a piece of paper that says somebody might be pre-qualified for a loan amount based on what they said. Whereas the alternative is our pre-approval letter.
It's like the Tommy Boy thing. It's like you can crap in a box and stamp it guaranteed, but all it gives you is a guaranteed piece of crap. That's what the pre-qual is.
Exactly. But then our pre-approval, congratulations, you've been pre-approved for the property and terms listed below. Here's the property. So that's more certainty. Here's the purchase price, loan amount, loan to value, loan type. Here's the date. What information has been verified? Check the boxes: income, assets, credit, AUS, which is automated underwriting system. All of that information has been verified. 5 reasons you should accept this offer. Our loan approval and closing dates will be met per the attached offer. We can't make that certainty if it's just a pre-qual. And it goes on to say a few other things that kind of brags about our team that helps with your negotiations, and we like the seller and their agent to see. But the main difference is this is basically like there's none of these loophole contingencies listed because we've done the homework. We know for sure you can get that loan. So anyway, I thought that was worth just kind of sharing the difference.
Really
Thank you for tuning in.
Once we have the
For more industry insights, follow us on all platforms at Loanselevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.